25 years of experience in various industries. Prior to this, she was the senior fund manager from East Spring Investments Berhad, where she managed Asia Pacific Japan unit trust funds and private mandates, institutional local mandates. Prior to that, Cheng Siu was the head of equity from Libra Invest Berhad, where she managed unit trust funds, private mandates, and investment mandates covering Malaysia, ASEAN, Asia Pacific, and global. She gained her fund management experiences in ASEAN and Asia Pacific markets when she was with UOB Asset Management before joining Libra Invest Berhad. Cheng Siu has won several Libra Fund Award Malaysia for the category of Mixed Asset Fund, as well as equity trust funds under her management. She's a chartered accountant of MIA and a CPA Australia qualified professional. She holds a Bachelor of Commerce from the University of Melbourne. Before we dive into the question, right, Cheng Siu, could you share how has the performance of global markets and currencies been so far in July? It appears that the market sentiment was largely optimistic, leading to favorable performance across global markets as well as currencies during that period.
Hi, Kim. Good to be here again. In fact, if you remember that during our presentation in the month of June, the market was a bit not so good, right? It was all red. And after a month now into August and last month, July, if you can see from the screen, right, it's all green, right?
Yeah, very happy to see that.
Yeah, very happy. It has been a long time that we haven't seen this kind of green, right?
Yeah.
Particularly Hong Kong. Hong Kong has done very well in July, up about 6.1%. Malaysia also recouped most of the losses, I would say, in July, recorded about 6% gain in the month of July. And all in a green, I would say, except for Japan, which are subject to some profit-taking activities. Well, if you look at the Malaysian market alone, I think surprisingly you see the best performer sector is actually property. And in fact, in July, there was foreign funds inflows, and the foreigner continued to buying even month to date. Month to date, it was about 400 over million. Yes. And the name that foreigner buying about like property, bank, utilities, right? So that explained, the top performer for the July, property, industry, and energy. So that's sector. So if you look at year to date, right? Yes, July is very good, but year to date, what is the performance like? Of course, Nasdaq
is still the winner.
Is still the winner, right? Deliver about 37% gain, year to date. While other countries, in Asia is doing quite well as well. Taiwan, Korea, all double digit, right? And but Malaysia has recouped, as I say, most of the losses in July, but still in negative territory, about 2.4% down. Thailand was the worst performer, down about 6.7%. Well, Hong Kong delivered mild positive, but I gotta warn you, August has been very volatile for everybody. And Hong Kong, I think, sink into red again. But Malaysia still held up quite well so far.
Even after state elections.
And in fact, we see some good momentum after election. So you will see year to date, naturally, property, utility, and construction are the top performing, whereas industrial and consumer was not doing well, was actually in a loss. If you look at the funds flows, wherever, in 2022, especially, foreigner bought into financial, bank all out, plantation, consumer. But you see this year to date is all, mostly out. The fund flew out from financial services, industrial, and also consumer. But they have this sector rotation into like what we mentioned just now. But recently, I think the funds flow start to come in, to position some in the banking stock as well. So currency. I think most of us will be very concerned. Even after the election, I think we don't see much improvement in the ringgit.
Yeah.
But if you compare, the currency, in terms of among the region,
Yep.
right, year to date, I think still quite mixed. But for the July itself, mostly actually, positive traded against US dollar, except for like, Taiwan,
Yeah.
Indonesia, rupiah,
Yeah,
all that.
correct.
Yeah, but if we compare ourselves, Malaysia ringgit against our peers currency, I think July we are doing quite well.
Yeah, July is a good month for us.
Yeah, but not year to date. If
Yeah.
you look at the year to date chart, right? We are good. We
Yep.
are relatively better than Japanese yen.
Yep.
Yeah, the rest, unfortunately, we were still doing much worse than the
So
rest.
it's time to visit Japan, maybe.
I think most of us have visited Japan, right?
Yeah,
Yeah,
yeah.
correct.
So certainly we see investors will continue to keep a close watch on the inflation dynamics, on the decision of global central banks. However, considering the prevailing trend, it seems that we are approaching the end of the tightening cycle. So what are the key investment themes to focus on going forward?
Okay. Let's look at this chart. I think I'm going to talk about the great transformation. Before this, I think I got to make very clear about what is happening in this world right now. It's not without race, to be honest. The macroeconomics, the outlook is cautious, I would say, and we are actually, entering into a very, very challenging environment right now, especially, we have this US and China tension, ongoing. I don't think it will end, anytime soon. And in fact, we are seeing, great change. We are experiencing great changes that is unseen in century. It's all because of the superpower transition. I don't know whether we can live long enough or not, right? To see who is really the final winner, right? In this kind of environment, how to invest, what to invest. So I think I would love to share this slide, from Tony Seva. I think this is about, what are the sector that is going to deliver a structural growth going forward in the 10 years, or even 20 years, right? And these are the sectors that list out here.
12 sectors there.
Correct. AI, but AI you got to buy not at a high, right? So it's not that buying anything about AI without concerning about the valuation. No, this is not our point. But AI is one of the sector that will deliver. If we are going through the transformation, robotic, solar, battery, a lot of them. But we have to see, the transformation. Sometimes we have to gauge the journey of the transformation by S-curve, right? And we have identified those sectors that is actually at the acceleration stage, and we actually identify three, right? Like we have AI, we have EV, and green energy. These are the three.
Actually, why acceleration phase? Is it because during that phase, those companies that are in this industry are able to capture the biggest amount of market share, biggest chunk of revenue? Is that so?
In 1900, right? There's no car, only horse on the street, right? But and in 1913, took about 13 years. Then you didn't see any horse on the street already. You see cars. But to get to that level, you need time, right? So there is a S curve. You will take about maybe 5 to 10 years. Then you see, how come it's not happening, right? Why is it acceleration? We identify those that we already see what is happening right now, and the earnings already kicking in, and we will see a sequential growth, quarter by quarter or even year by year for the next 5 years at least. So we continue to what we mentioned just now. What are the theme, right? In this kind of challenging world, I think we have to invest something that really we know that is going to have growth, right? And even market is very volatile. Even it got bashed out, we know that this company is going to make it, and the share price will come back. Therefore, we identify this. Number one, robotic AI, right? This industrial robot are used in mass produce everything from cars to medicine, country that deploys them in a greater number, right? It is going to build the competitive advantage, right? And China is number one. And in 2021 itself, right, there were about 268, if you look at that, right? 268,000 robotics installation. And this number is actually bigger, than the rest of the countries combined. So you can tell the capability of the production, in China is still remain very solid. But of course, as a fund manager, we do not only identify winner in this space, right? We also need to shy away, from the loser as well. As you see here, right? The chart here is estimated there will be about 300 million full-time job is going to be replaced by AI.
Oh.
Isn't it a good news or bad news?
Yeah.
Bad news, right?
Yeah.
So it will be a disruption to a lot of sectors, and our job, we have to identify, who are those, jobs that we have to, or which sector that we really have to shy away.
So we still need professional fund management to help us to achieve that kind of.
This is our role, right? And we have to and it has been very dynamic, the market very dynamic. Today the winner, tomorrow can be the loser. So we really have to catch up, in a timely way. Yes. So the next theme, I would say, ESG, ESG driven. There will be 2.7 trillion investment annually driven by ESG. If you are aware, right, recently there are a lot of disaster, natural disaster, right? Like what's happening in the northern China, the flood, maybe 30-40 people died. India also about more than 50 people died because of the flood. Bangladesh also 50 over people died because of the flood. And more recent one is the Hawaii, right? Hawaii, I think in Maui, that town was 80% gone because of the wildfire, right? And the death is already risen to about almost 100. And 1,300 people are missing. Yeah, I was told that the temperature requirement for cremation is 800 degree Celsius. And in Hawaii, this wildfire, the temperature went up to 1,000. So it's difficult. Even they found the corpse, right? They can't. It's because
so we need to do something for the environment.
It definitely. So it's a irreversible trend, and it's going to be, and they will speed up, right? And if you look at that, we back to in terms of the ESG space, what are we going to invest? If you look at that, this bar, is green color, which is like solar, hydrogen and EV, right? So now, why is it feasible? Because solar cost has gone down 80% compared to 10 years ago. That's why it make it economical right now. Battery cost down 87%. And wind cost also down about 46%. And guess what? Solar is now the cheapest source of energy. So we couldn't imagine that, maybe 10 years ago. But this is what is happening. Therefore, our investment team, which is we are going to bet heavily, even for the local or regional mandate, we will actually identify winner from this area. So the last one, I think, will be EV. EV, I think, as we mentioned, is actually at the S-curve acceleration stage right now. If you look at this chart, right, 80% of the last year's production, EV production, actually made by about the top 15, the 15 car maker, which is I think listed here. So whoever that you don't see from this chart, right, probably we have to ask why. Are they lagging, right? And those people probably we need to be cautious, and they probably may be lagging and losing out, and very tough to
to compete.
to compete. So you probably will ask, what about Malaysia? Well, Malaysia, the infrastructure is not ready, all that. But with Tesla coming in, with very good sales from Auto, BYD, and more cheap EV like Dolphin is happening, I think the infrastructure, it will have a push factor that to speed up, right? And who is involved? I think one of the name like Inson, they are partnering with Petronas, one of the subsidiary to fix or to install the EV charging station. So these are the thing that we think the winners is not scarce, right? Okay. So
So we have identified a couple of trends, like just now we mentioned about robotics and AI, ESG and EV. So how could investors strategize themselves in order to position within the market?
We have to see very clearly from the top first. I've just attended Tan Sri Andrew Sheng's market talk just now. It has been a fantastic talk, but quite gloomy lah, I would say. But I think one thing he said, I agree, to him a lot, is, to do investment, we have to really stand probably 30,000 feet high, to see what is happening. Then we have a clearer view, right? Then only we go down to the level ground and to practice, and to work with that, right? So we will not lose ourselves if we see clearly what is happening in a more broader perspective, right? I think, people talk about globalization is dead, right? I think it's not realistic, but I do not deny that, there are some changes now. It will be a new phase of globalization, right? You look at China export market 2022, US is actually number one import goods from China, and Malaysia is actually number 9, right? And you look at the chart here, from since China joined WTO in 2001, the export value stood at about 266 billion, and 2022 it has gone up to 3.6 trillion. This is very huge number, and it is actually bigger than the country, the economy of country combined, like UK, India, and even France, right? And this is something that I think US is worried about, right? It's still dependent on China. Therefore, going forward, I wouldn't be surprised that the China export will actually growing at a slower pace, or even flat, or even coming off. But we have to know that China now is already, they are going through transformation. The switch, that there's dual circulation, if you remember, right? They want to concentrate on the domestic consumption. And we have to identify the winner or the potential from the domestic consumption. Whereas export, I think because of the trade war, all that, it will be affected. So this is one. Then the stocks performance, right? And what we think about the global outlook, in terms of the economic wise, I think if you look at the M2 growth, liquidity in the market, many central bank now, they are actually
increasing rates.
Yes, and they are actually reduce the liquidity, right? And if you look at the right-hand side chart here, right, the M2 growth is actually plunge, right? But normally, the stock market will grow in tandem with the M2 growth, right? The US, the same, global also the same. But this time, even the liquidity shrunk, right? But the market continued to go up, right? And how to explain that? The only thing that we can explain is geopolitics, right? So going forward, when we talk about investment, not only the fundamentals of the company, we also have to look at the geopolitics. We also have to take the politics into consideration before we make decision. So sad to say, but so inverted yield curve has already lasted for about 10 months, okay. And normally, normally when you have inverted yield curve, then
follow by recession,
right? So, but recently, we talked to one of the global strategies, And then he said a lot of economists has almost given up their call about recession.
So means there's no recession anymore.
The economists can't explain, right? It
Yeah.
has been, the inverted curve has been lasted for so long.
10 months.
Yeah, but the key indicator, the economic indicator, is still very strong, right?
Yeah.
So is it something that is, maybe not this time, or, not too sure, but we have to position ourselves. There will be a recession if it continue to last, the inverted yield curve continue to last, that will be recession one day. And what should we do? Yeah, we have to position that as well. So back to normally we'll talk about the interest rate, right?
Yep.
I think we think interest rate is already at the tail end.
Yep.
Why? If you look at the left-hand side chart, right? This is the small business lending cost, the borrowing cost. Yeah, they have to pay about 9.2% for the
9.2%
yes.
borrowing cost.
Yes.
Wow. Okay.
So how to survive, right?
Yeah,
SME, small business, you borrow money at 9.2, and how much you want to make from that, right?
Yeah.
So it's not sustainable. And if you look at the US leverage loan outstanding, it has gone up, like from 2010, or maybe 2013, below about 600 billion. Now it's already 1.4 trillion, I think. Yeah. So it has almost, right, double, right? The leverage loan is actually, loan to those that very high geared, really highly geared, and with a very low credit rating. That also means default risk is very high. So it has gone up so much. Therefore, we think that, the moment you continue to hike the rate, I think this whole economy is going to be in big trouble.
Not even the businesses, households will also be affected.
Correct. So then the next question will be, what do we think about the rate? Whether it will come down or stay there? I think we think probably it will come down, provided that economy is gone into a bad shape. If but we think that the rate probably will not go back to the previous negative rate environment or low rate environment anymore. We think that the rate will stay higher because we just simply think the inflation won't go down as much. Yeah. Okay.
Right.
Yep.
So we have actually explored some of the investment trends. We have also talked about the US-China trade dynamics. Interest rates going to stay higher for longer.
Yep.
So where to position? Where should we position?
Let's look at the chart here, the valuation chart, right? We have identified two. That's one, Hong Kong, right? Because Asia Pac, most of them have done quite well. That we have mentioned, like Korea, Taiwan, all these people, India also doing very well.
Yeah.
The only market that is doing not so well,
the laggards,
is Hong Kong, and we think that is, yes, there are a lot of challenges, but we think that the value is there. The value has emerged. It has actually, traded one standard deviation below mean, and another market will be our country, right? And it is also look very cheap. That's also explain why the foreign funds start to come back.
Yep.
Yeah. Okay. Let's move on. Okay. Then maybe you will ask, then how, if I got money, where should I put?
Yeah.
I think today the going forward, the world will be dominated by two, right?
US and China.
US and China, right? So you cannot afford to ignore US and also cannot afford to ignore China, right? These are the two countries that with very good technology in this world, right? And China-led allies, especially Asia, I think the growth will continue to come from this region. Yeah, so we think that the Asia, we should put money in Asia because the key driver is going to be a key driver of global growth in the next 10 years. Yeah, in 2013, 70% global growth is actually from Asia.
Will that actually be translated to corporate earnings?
Yes, but I think going forward, the growth it is not realistic to expect exponential growth, right? After the financial crisis, 2008, after that, the growth rate, the global growth rate is actually lower than pre-financial crisis. Okay, and we take this COVID-19 as a benchmark. Anything, the growth going forward for the next 10 years will be lower than pre-COVID. Yeah, and one of the reason being, besides a lot of geopolitical issue, that is also because of the base getting higher and higher. Therefore, the rate also will come modest. Not as high. Yes. So back to where to invest. I think Asia Pac is the future. Because if you look at the dollar has gone up so much already. So if we think that the rate is going to be paused at the tail end or even come down next year, a dollar probably already peaked. So normally when dollars start to come off, the emerging market will benefit.
Same goes to the currencies.
Correct. And if you look at the valuation, the Asia Pac valuation is actually traded at 34% discount to the US, MSCI US, which is traded at about 20.3 times. So where I think it's quite clear, it's cheap, right? So
Malaysia. So what's the outlook for Malaysia going forward, especially now we already clear this state election? Maybe political overhang may not be a key consideration going forward.
Remember in May and June, when the market was so depressed, and we actually called buy, right? Because for the valuation, for the silver linings, we think yes, China reopening, the thesis didn't change, although probably it is delayed, but it will come, right? And then foreign shareholding also at the all-time low, right? And we saw this inflows in July and even August, now, right? And valuation is cheap, and the fundamentals is better than the Asian financial crisis, right? And FDI is doing very well, and we have this Silicon Valley, in Penang, and tech cycle probably is bottoming out as well. So all these are the thesis for us to call a buy for Malaysia. And now one of the overhang clear. So that's why we see that the market continue to grow. The market continue to be positive. Even if you don't see much in the index, but we can see a lot of second liner also jump quite a fair bit. But if you ask me about yes, overhang clear, but I would think that is the state election outcome is actually worst state election outcome because you see, right? Yes, 3-3, as expected. No change in the state government, but the unity government actually have lost, the total control in Selangor. So if you look at that, compared to 2018, the winner is DAP lah and the PN lah, but the loser is actually PKR and UMNO. So I think this was set a stage for the next election. I think it will be a catalyst, for the unity government to really think, if they want to be in power in a 4 years time.
So what can be done?
Correct. So a wise government, I think they have to do something. If not, I think the voter will be very violent, right? So if they didn't do anything good or bold enough to rescue the economy, or even for the future, prepared for the future, I think they will be ousted, right? Therefore, I think it will be, in political sense, it will be okay for the next 3 years. Then try to evaluate after that, probably. So that is for Malaysia. Okay.
So in terms of we see opportunities within Asia Pacific region, even Malaysia, Hong Kong, the value has already emerged. So is there any thing that you like to share with the audience today?
Yeah, we
Yeah.
have recently launched a Asia Focus
Yeah.
mandate, right? The investment strategy is very different. It's actually this mandate is riding, on the Asia quality, structural growth and mega trend that we have just mentioned just now, and it's denominated in Sing dollar, right? And why now? Because we think that we see value, and they are some of the market actually traded at a very undemanding valuation.
Valuations.
Therefore, there is alpha.
Yeah.
And what is it different from others, right? This is actually a target return nature. We aim to achieve like a 8% target return, over the 3 years rolling period, right? And the strategy will be, we try to achieve that target return, invest in Asia Pac, ex-Japan, of course, and then we identify those winners from the long-term mega trend, like what we have mentioned just now.
Yep.
And we invest in quality growth stocks, and also we also will invest in high yielding stock to anchor the portfolio, to reduce a bit of the volatility.
Yep.
And most importantly is the tactical approach, meaning to say we want to generate that kind of absolute return. We have to trade, right? We have to sell high, buy low, sell high, buy low.
Yeah, to capture the opportunity in the market.
Correct.
So, but why absolute return?
This market, especially Asia, right, is very volatile and it's very dynamic and it's very susceptible to any news, right? And it can react very, very violent. So if we make money, it's not a one way up trend. It will be the movement, and we want to capture the volatility to make alpha. So that is our purpose, to lock in profit and then come in again later.
When things are cheap, then maybe we buy. When things are becoming more expensive, valuation has become more expensive, then maybe it's time to take profit.
Correct, because now, especially we are actually it's a challenging environment, right? If buy and hold strategy probably is not so suitable at this time. And we need to do a bit more tactical in order to deliver alpha return to our client.
So if we were to move to the next slide, we'll be able to see some of the key attributes of PGW Asia Focus. So as we mentioned earlier, this product invests across different sectors and in equities. They are listed in Asia Pacific markets, right? In terms of the sector allocation, we see that we are highly exposed to information technology, consumer discretionary, as well as communication services. And our top 5 holdings include Sunny Optical, Leading Co, and the rest. So if we were to move to the next slide, we see of course, there are a lot of opportunities in the market. The most important thing is how we could actually help our investors to navigate along the volatility, right? Phillip Capital Malaysia just hope you guys are not too strange with us. We are an integrated Asian financial house with a global reach, well established, serving you since 1975. We operate in the financial hubs of 15 countries, including offices in Malaysia, right? We offer a wide range of financial services, including discretionary private mandates, unit trust, money market, stockbroking, futures, and CFD available for corporations, retail clients, institutions, as well as high net worth individuals. We also offer discretionary private mandate managed by dedicated investment professionals. We are also your one-stop investment solutions provider platform for more than 400 unit trust funds and more than 76 PRS funds, right? In terms of our managed account, we have a wide range of private managed account that could cater to different investor needs. Blue chip is suitable for value investors, dividend enhanced for yield seekers. ESG matters have gained significant importance. Hence, we think our ESG mandates are suitable for investors who like to optimize their risk-adjusted return by constructing a diverse, sustainable portfolio of ESG companies. Separately, we also have ETF, opportunity, UT, and other products that meet your investment preferences and financial goals. For global accounts, apart from PGWA that allows individuals to invest into international stocks, foreign unit trusts, ETFs, alternative investments, we allow investors to gain access to 23 global exchange, right, by having a PGWA account with us. We also have the recently launched Asia Focus, as well as PGWA New Frontier for our investors as well. Meanwhile, our unit trust arm, Phillip Mutual Berhad, offers a comprehensive list of local and global unit trust funds that may suit your investment preferences and financial goals. Phillip Dana Aman is our local Sharia equities fund. We also have other conventional equities offering like dividend fund, PMEGF, Phillip Per fund, as well as recovery. For defensive investors, we have money market funds, as well as Phillip Dana Muni, which is a fixed income fund. We also have Phillip Select Balance, which is a mixed asset fund that invests into both equities and fixed income securities. And last but not least, we have unit trust with global Asia exposure, including Asia Pac Income, Focus China, Phillip Global Star, and so on. Right? We are now available to answer any questions that you may have in your mind. Feel free to comment in the chat box. Right? Yeah. I haven't seen any questions yet, right? Okay. Feel free to, comment into your in the chat box, right?
No, right? Okay.
That was, I think, in the beginning of the presentation, right? Oh, yeah, we have a question sent to our chat box directly.
Okay.
Yeah. Country Garden, their bonds actually defaulted recently, crowded a lot of investors in the market.
Yeah.
I think Hong Kong market is also seeing some weakness lately. So
Correct.
what's your
Yeah, it's sad to see, another big company, big property developer, got into this default issue. But I understand that there are some measure implement, right? And we have to see and watch what is going to happen next, right? But there are also other property developer, when they see this, they're trying to, give comfort to the bondholder by early, paying back to the bond even before the
maturity.
Correct. So I think this is something that is kind of expected. The property market in China is going through quite a messy phase right now. So, but with the government's determination, to come out and support, I think this will be. We will get rid of this quite soon. As you see yesterday, central bank actually announced cut rates 15 basis point, right? So I think this is the second time already this year to cut rate, and this is also to boost the trying to help the lending, to ease the monetary policy. So we will see a lot of measures will come on board to rescue.
So likely monetary policy in China will remain accommodative.
It will be very accommodative. But one thing I think China is lacking now is confidence. Fundamental wise, structural, future, I think there's no issue. But they have to build the confidence, to bring back the confidence even to the real economy and even stock market, right? Once the confidence is there, I think the market will fly. So now we still have to be a bit patient, and see how it address the default issues.
We have a question on the product itself. Is PGWA Asia focus mainly focusing in Asia Pacific markets? Do we have any other exposure in South Asia, like India, or even other markets like US market?
Asia focus, it will be only investing in Asia Pac ex Japan. But Asia Pac, it includes India, right? We have Southeast Asia as well, ASEAN. We invest in Australia, Korea, and Taiwan, and China are also the Asia Pac country, right?
So not including US and Europe.
No. But having said that, why you won't see, all this country in my portfolio right now because it is a target return. Therefore, we are not tied by benchmarking, right? Whichever market is cheap enough, we will go there. Why we don't invest now in Korea and Taiwan or even India? Because we see more.
They have done well.
They have done well, right? So we are waiting, right? So recently, Korea has retracted, and we see some name also. Maybe in a few months' time, you will see some Korean name. Yeah. Therefore, that is the. That's why I say it is nimble. This portfolio is very nimble because
flexible.
Yeah. It's not that I must have how many percent in Taiwan, how many percent in India, to mimic the benchmark. This one is benchmark free, and we can invest freely to capture the alpha return.
So we have a question from the audience saying that US market seems to do well, very, very well this year. Do we think that the risk of recession is still there?
Definitely yes.
Yeah. So
Definitely yes.
and historically, we think like the inverted yield curve had never disappointed investors. Right?
No,
usually you be followed by recession.
It's around 70%, right? Maybe now it's already lasted for about 10 months. By next year June, right? If based on history, it will be
Highly
recession
probable.
really. But it's just that now employment market still very tight.
Labor market still very strong.
But we see some weaknesses already. In fact, there is risk, right? If let's say the leverage loan that I showed just now, if default come, even we see collapse in some smaller banks, and with that kind of high interest rate, if it doesn't come down, it will affect and reflects into the cost, the corporate cost. Yes. So it will come if it lasted longer.
Maybe one last question on Malaysia. We have a question in the chat box. What do you guys think of Michael Burry action of put option on bearish against S&P 500 and Nasdaq? So is it best to avoid US market at the moment and focus on Asia?
I will say US and China are the two different worlds, right? And both of them are going to benefit in the US-China tension. US is trying to bring back the industrial, and China is trying to localize and build tech, to be self-sufficient, right? So these two are like pumping the gear, pressing the gear to move forward to get to that kind of level, as soon as possible. So there will be a lot of capex involved and a lot of activities by these two, and there will be a world that benefit from China is like one of them, Malaysia, right? The Asia region will benefit from the China's growth, and then the US ally like Korea, Japan, Taiwan, they will benefit. So these are the two gangs that we cannot afford not to have. So when you come to the question whether is it too high, I would say if in terms of the earnings yield, earnings yield, right? Now is already at a crossroad, like treasury yield already 5-6%, because it's quite expensive now, the Nasdaq, right? So if you look at that, from that perspective, I would recommend maybe you take half of the profit and put it in a cheaper market like Asia, right? And I will promote Asia focus then. Cheap, and it's time to buy now. Don't miss the boat.
Correct. So it seems like US and China are two, big guys that we have to focus on them, of course. But from a tactical asset allocation perspective, perhaps it's time to take some profit from the US market, bring some to Asia market, including China.
Yes. So, not sell all, but take some profit is good.
What about Malaysia? Any last word on Malaysia? Where to position? What will be the sectors that will benefit from that?
I will still say, when foreigner come in, the large cap will
The
benefit.
heavyweights.
Yeah. And some of the team that we see, property probably, I don't think it's good to chase high now. Yeah. I think tech is bottoming out, right? And tech we should position, and we're already positioned, and we did quite well in a rebound, recent rebound. Yeah. So I think we need to look for the structural growth story. Yeah. For Malaysia, I think we have. Especially the semiconductor.
Yep.
And do you know that Malaysia is the rank 7 of the electronic exporters?
Exports in the world.
Yeah.
Yep.
So I think this is the area that we should focus in.
I think there is also a statistics that the total trade number of Malaysia last year in 2022, I think over 30% of the numbers are actually from E&E sectors.
Yes,
Yep.
yes. But it's not without risk, to be honest. The global market right now is actually quite challenging. Yeah. So we really have to invest, don't put all your money in, reserve some cash, I will advise. Yeah. But if market weakness, I think should deploy some, not put in all. Yeah. I think that would be a wiser choice. Yeah.
Okay. Last but not least, we actually put in the link in the comment section. Feel free to leave your comments here. Can just leave some feedback on our Phillip Mastermind. Right? Okay. Thank you so much for dialing in today. Thank you, Ching Siu, for her insightful sharing. We'll see you again in the next Phillip Mastermind. Thank you.
Thank you. Bye-bye.